Question 1. Which of the following best describes the primary purpose of cyber insurance in risk management? A. To replace lost revenue due to cyber incidents. B. To provide a financial safety net against cybersecurity threats and breaches. C. To mitigate all technological risks within an organization. D. To cover physical damage to IT infrastructure caused by cyber events. Answer. B. To provide a financial safety net against cybersecurity threats and breaches. Explanation. Cyber insurance is primarily intended to provide a financial safety net for organizations in the event of a cybersecurity incident, such as data breaches, ransomware attacks, or business interruption caused by cyber threats. It covers costs associated with these events, including legal fees, public relations, and forensics. While cyber insurance helps mitigate some risks, it does not cover all technological risks, nor does it directly replace lost revenue or cover physical damage to IT infrastructure unless specifically stated in the policy. This understanding aligns with the role of cyber insurance as outlined in the Fundamentals of Cyber Insurance section of the syllabus. Question 2. Mr. Harris runs a small business in Maryland that recently suffered a ransomware attack. The hackers encrypted critical business data, and the company has incurred significant costs in trying to restore operations. Mr. Harris has a cyber insurance policy that includes first-party coverage. Which of the following should Mr. Harris expect to be covered by his cyber insurance? A. The costs associated with ransom payment and negotiation. B. The cost of replacing all the company's physical IT infrastructure. C. Legal fees related to customer lawsuits arising from the data breach. D. Compensation for loss of revenue due to operational downtime. Answer A. The costs associated with ransom payment and negotiation. Explanation. Under first-party coverage in a cyber insurance policy, Mr. Harris can expect coverage for the costs directly related to the ransomware attack, such as the ransom payment, legal expenses for negotiation, and costs associated with mitigating the breach. However, coverage for physical infrastructure, loss of revenue due to downtime, and customer lawsuits falls under different types of coverage, such as business interruption, which may not be included in all policies, or third-party liability coverage. According to the Cyber Insurance Coverage Type Syllabus section, first-party coverage focuses on protecting the business from direct financial losses incurred due to the cyber incident itself. Question 3 scenario. Mr. Thompson, the Chief Information Officer EO of a healthcare provider in Maryland, is reviewing the cybersecurity policies of a third-party vendor they plan to partner with. The vendor stores sensitive patient data on their cloud servers. Mr. Thompson is concerned about the potential for data breaches and wants to ensure that the vendor's cyber insurance policy includes third-party liability coverage. Which of the following aspects of the vendor's policy is most critical for Mr. Thompson to review? A. Whether the vendor's cyber insurance covers physical damage to their data center infrastructure. B. Whether the policy covers liability for data breaches and privacy violations that could affect Mr. Thompson's organization. C. Whether the policy includes coverage for the vendor's internal employee training programs. D. Whether the policy provides coverage for cybercrime attacks, such as fraud or phishing, against the vendor. Answer. B. Whether the policy covers liability for data breaches and privacy violations that could affect Mr. Thompson's organization. Explanation. Mr. Thompson should be most concerned with ensuring that the vendor's cyber insurance includes third-party liability coverage for data breaches and privacy violations. This type of coverage is crucial because it would protect the healthcare provider in case the vendor is responsible for a breach of sensitive patient data. Cyber insurance policies covering third-party liability are designed to address the legal and financial implications of such breaches, including lawsuits and regulatory fines. The other options, physical damage, internal training programs, and cybercrime coverage, are not directly related to the vendor's liability in case of a breach affecting Mr. Thompson's organization. This understanding aligns with the cyber insurance coverage type section of the syllabus, particularly the third-party liability coverage. Question 4. Which of the following is a key consideration when evaluating cyber insurance premiums? A. The size of the organization's physical office space. B. The organization's cybersecurity hygiene, such as firewalls and encryption. C. The number of employees working remotely. D. The number of IT certifications held by the organization's executives. Answer. B. The organization's cybersecurity hygiene, such as firewalls and encryption. Explanation. When determining cyber insurance premiums, one of the most important factors insurers evaluate is the organization's cybersecurity hygiene. This includes the use of firewalls, encryption, employee training, and other security measures that reduce the likelihood of a cyber incident. Poor cybersecurity hygiene increases the risk of a cyber attack, leading to higher premiums. While the number of employees working remotely or the size of office space may influence risk assessments, they are not as directly related to the cost of premiums. This concept is part of the policy underwriting section of the syllabus. Question 5. Which of the following is the primary purpose of a business impact analysis, be it in the context of cyber risk management? A. To calculate the potential cost of a cyber insurance policy. B. To identify the vulnerabilities and threats in the organization's IT infrastructure. C. To assess the financial impact and operational disruption from potential cyber incidents. D. To assess the effectiveness of an organization's incident response plan. Answer: C. To assess the financial impact and operational disruption from potential cyber incidents. Explanation: a business impact analysis (BIA) is a critical tool in cyber risk management. Its primary purpose is to assess the financial impact and operational disruption that could result from a cyber incident. This helps organizations prioritize resources and make informed decisions about risk mitigation and business continuity planning, while identifying vulnerabilities and assessing incident response are also important. The main goal of the BIA is to understand the potential consequences of cyber incidents. This is detailed under the Cyber Risks and Threats section of the syllabus. Question 6. A healthcare organization in Maryland recently experienced a data breach involving unauthorized access to patient records. The organization is reviewing its insurance policy to determine what coverage is available. Which of the following is most likely covered under the third-party liability coverage? A. Costs for restoring the healthcare organization's internal IT infrastructure. B. Legal expenses resulting from a lawsuit filed by patients whose data was breached. C. Costs of implementing new employee cybersecurity training programs. D. Loss of revenue due to the operational shutdown caused by the breach. Answer: B. Legal expenses resulting from a lawsuit filed by patients whose data was breached. Explanation: third-party liability coverage primarily addresses legal claims made against the insured organization by third parties such as patients or other affected individuals. In the case of a data breach, this coverage would typically include legal expenses resulting from lawsuits, regulatory fines, and privacy violations. It does not generally cover costs related to internal IT infrastructure restoration or loss of revenue due to operational shutdowns. This aligns with the cyber insurance coverage type section of the syllabus, particularly third-party liability coverage. Question 7 scenario: MS Adams is a chief risk officer at a financial services company in Maryland. The company has experienced a cyber attack that involved the theft of sensitive client data. As part of the recovery, MS Adams needs to notify the affected clients about the breach. Which of the following would most likely be covered under the organization's cyber insurance policy? A. The costs associated with notifying clients about the breach and providing credit monitoring services. B. The legal fees for defending against any class action lawsuits filed by affected clients. C. The cost of replacing the stolen client data with new, secure data. D. The revenue lost during the downtime while investigating the breach. Answer: A. The costs associated with notifying clients about the breach and providing credit monitoring services. Explanation: under first-party coverage, cyber insurance often includes costs associated with breach notifications, such as informing affected clients and providing credit monitoring services to protect them from identity theft. Legal defense costs for lawsuits and revenue losses from downtime would generally fall under third-party liability and business interruption coverage, respectively. However, notification and credit monitoring are specifically covered as part of breach response in many cyber insurance policies. This falls under cyber insurance coverage types, particularly incident response coverage. Question 8. Which of the following best describes the concept of cybercrime coverage at ECA cyber insurance policy? A. Coverage for physical damage to data centers caused by cyber attacks. B. Protection against fraud, phishing, and social engineering attacks. C. Coverage for the business interruption caused by a ransomware attack. D. Liability coverage for regulatory fines imposed due to non-compliance with data protection laws. Answer: B. Protection against fraud, phishing, and social engineering attacks. Explanation: cybercrime coverage is a type of coverage specifically designed to protect against financial losses resulting from fraud, phishing, and social engineering attacks. This includes instances where employees or customers are tricked into revealing sensitive information, which is then used for fraudulent purposes. While business interruption and physical damage are important aspects of cyber insurance, they are typically covered under first-party coverage, not cybercrime coverage. Regulatory fines related to non-compliance fall under legal liability or third-party coverage. This is part of the cyber insurance coverage type syllabus. Question 9. Which of the following is a key factor in underwriting a cyber insurance policy for a healthcare organization? The size of the organization's annual revenue. B. The level of cybersecurity measures in place, including encryption and firewalls. C. The number of patients served annually by the organization. D. The organization's history of data breaches or cyber incidents. Answer. B. The level of cybersecurity measures in place, including encryption and firewalls. Explanation. One of the most critical factors in underwriting a cyber insurance policy is assessing the organization's cybersecurity measures. This includes evaluating whether the organization uses adequate encryption, firewalls, employee training, and other security protocols to reduce the likelihood of a successful cyber attack. While revenue size and patient volume are relevant to risk management, they do not have a significant impact on underwriting as the cybersecurity hygiene. This is covered in the policy underwriting section of the syllabus. Question 10. Which of the following regulations is most relevant when assessing a company's compliance with data protection in Maryland? A. The Maryland Cybersecurity Jobs Act. B. The Health Insurance Portability and Accountability Act, HIPAA. C. The Sarbanes-Oxley Act, SOX. D. The General Data Protection Regulation, ED. Answer A. The Maryland Cybersecurity Jobs Act. Explanation. The Maryland Cybersecurity Jobs Act is specifically relevant when assessing compliance with state-level cybersecurity requirements in Maryland. This law focuses on enhancing cybersecurity measures within the state, including data protection standards. While HIPAA and GDPR are also important for healthcare and international data protection, respectively, the Maryland Cybersecurity Jobs Act is most relevant to organizations operating in Maryland. SOX is primarily concerned with financial reporting and governance rather than data protection. This is covered under the legal and regulatory considerations section of the syllabus. Question 11. Which of the following is most likely to trigger a claim under a cyber liability insurance policy? A natural disaster that causes physical damage to a data center. B. A denial of service attack that disrupts an organization's website. C. A third-party vendor breach that exposes customer data. D. An employee mishandling confidential customer information. Answer. B. A denial of service attack that disrupts an organization's website. Explanation. A denial of service (DOS) attack is a cyber attack aimed at making an online service unavailable by overwhelming it with traffic. This is typically covered under cyber liability insurance as it falls under the category of cyber incidents that disrupt business operations. While natural disasters and third-party vendor breaches may trigger other types of insurance claims, they are not the primary focus of cyber liability policies. Mishandling of data would typically fall under a privacy breach coverage. This is addressed in the cyber incident coverage section of the syllabus. Question 12. Which of the following is an example of a business interruption coverage in the context of cyber insurance? A. Coverage for legal fees incurred during a lawsuit. B. Payment for revenue lost due to a network outage after a cyber attack. C. Coverage for data recovery expenses following a ransomware attack. D. Protection against regulatory fines for failing to notify affected individuals. Answer. B. Payment for revenue lost due to a network outage after cyber attack. Explanation. Business interruption coverage under a cyber insurance policy typically covers the financial losses an organization incurs when its operations are disrupted due to a cyber attack. This could include loss of revenue due to system outages, which is a common consequence of incidents like ransomware attacks or denial of service attacks. Legal fees, data recovery expenses, and regulatory fines are generally covered under other aspects of the policy. This aligns with the business interruption coverage section of the syllabus. Question 13 scenario. A marketing firm's website is hacked and customer data, including credit card information, is stolen. The firm is required to notify its customers and provide credit monitoring services. Which part of the firm's cyber insurance policy would most likely cover the costs associated with notifying customers? A. Third-party liability coverage. B. Business interruption coverage. C. Privacy breach coverage. D. Cybercrime coverage. Answer: C. Privacy breach coverage. Explanation: privacy breach coverage under cyber insurance policy typically covers the costs associated with responding to a data breach, including notifying affected customers and providing services like credit monitoring. Third-party liability would cover legal claims from affected individuals, while business interruption would cover lost revenue. Cybercrime coverage deals with fraudulent activities, not breach notification. This falls under privacy and data protection in the syllabus. Question 14. Which of the following is an example of a ransomware attack? A. An attacker uses social engineering to trick an employee into sharing login credentials. B. Malware encrypts an organization's files, demanding payment for the decryption key. C. A hacker gains unauthorized access to an organization's database and steals customer data. D. A company's website is taken offline by an overwhelming amount of internet traffic. Answer: B. Malware encrypts an organization's files, demanding payment for the decryption key. Explanation: a ransomware attack involves malware that encrypts an organization's files or systems, making them inaccessible until the organization pays a ransom to the attacker for the decryption key. This is distinct from other types of cyber attacks, such as social engineering or data theft. Ransomware is often covered under cyber insurance policies, specifically under first-party coverage for data recovery and business interruption. This topic is part of cybersecurity threats and risk management. Question 15. Which of the following is an important factor when calculating cyber insurance premiums for an e-commerce business? A. The number of employees in the company's IT department. B. The number of customers who make online purchases annually. C. The strength of the company's website's cybersecurity defenses, such as encryption and multi-factor authentication. D. The size of the company's office space and physical assets. Answer: C. The strength of the company's website's cybersecurity defenses, such as encryption and multi-factor authentication. Explanation: cyber insurance premiums are heavily influenced by the company's cybersecurity measures, including the use of encryption, multi-factor authentication, firewalls, and other tools to mitigate cyber risks. The number of customers or the size of office space is less relevant in calculating premiums compared to the strength of the company's security defenses. This falls under policy underwriting and risk assessment. Question 16. What does network security liability coverage in a cyber insurance policy typically protect against? A. The costs of replacing stolen data. B. Legal claims arising from a data breach or cyber attack. C. The expenses incurred when recovering from a ransomware attack. D. Coverage for physical damages caused by a cyber attack. Answer: B. Legal claims arising from a data breach or a cyber attack. Explanation: network security liability coverage addresses legal claims and expenses resulting from a data breach or a cyber attack, such as lawsuits filed by third parties or affected individuals. It is not typically concerned with replacing stolen data or recovering from ransomware attacks, which would be covered under different parts of the policy. It does not cover physical damage, which would fall under property or business interruption insurance. This topic is part of third-party liability coverage. Question 17. Which of the following regulatory standards requires financial organizations to protect consumer data through cybersecurity measures? A. General Data Protection Regulation (EDR). B. Health Insurance Portability and Accountability Act (HIPAA). C. Gramm-Leach-Bliley Act (GABA). D. Sarbanes-Oxley Act (SOX). Answer: C. Gramm-Leach-Bliley Act (GBA). Explanation: the Gramm-Leach-Bliley Act (GLBA) applies to financial institutions and mandates the protection of consumer financial information. This includes implementing measures to safeguard data, ensuring privacy, and disclosing privacy practices to consumers. While GDPR and HIPAA are relevant to specific industries and SOX focuses on financial reporting and corporate governance, GLBA is the key regulation for cybersecurity in the financial sector. This is part of the legal and regulatory considerations section of the syllabus. Question 18 scenario. A large technology company in Maryland has recently suffered a breach where customer personal information was exposed due to an inadequate security protocol. The company is considering a cyber insurance policy to cover its legal liabilities and recovery costs. What coverage should the company prioritize when evaluating its cyber insurance policy? A. Business interruption coverage for financial losses during the downtime. B. Cybercrime coverage for potential fraudulent activities related to the breach. C. Privacy breach coverage to address the exposure of personal information. D. property damage coverage for any physical damage caused during the breach. Answer: C. Privacy breach coverage to address the exposure of personal information. Explanation: privacy breach coverage is critical when addressing the exposure of personal information, which is a key concern for companies handling sensitive data. This coverage will help with breach notification, legal defense, and providing services like credit monitoring. Business interruption and cybercrime coverage are important but focus on different aspects of a breach. Property damage is unlikely to apply in a data breach scenario. This falls under privacy and data protection. Question 19. Which of the following types of cyber incidents is most commonly covered by a cyber liability insurance policy's first-party coverage? A. Legal claims from customers whose data was exposed. B. Data recovery and restoration costs after a cyber attack. C. Regulatory fines resulting from a data breach. D. Lawsuits filed by competitors due to an unfair business advantage gained through cyber tactics. Answer: B. Data recovery and restoration costs after cyber attack. Explanation: first-party coverage typically addresses the costs directly incurred by the insured organization, such as expenses related to data recovery, system restoration, and business interruption due to a cyber attack. Legal claims, regulatory fines, and lawsuits from third parties are covered under third-party liability coverage. This is addressed in first-party coverage under the syllabus. Question 20. A company is reviewing its cyber insurance policy, which includes coverage for data breaches, ransomware attacks, and system outages. If the company suffers a ransomware attack that results in an operational shutdown, which aspect of its policy would likely cover the business losses caused by the downtime? A. Cybercrime coverage. B. Business interruption coverage. C. Privacy breach coverage. D. Network security liability coverage. Answer: B. Business interruption coverage. Explanation: business interruption coverage is designed to cover the financial losses incurred when a company's operations are disrupted by a cyber attack, such as during a ransomware incident. This coverage helps compensate for lost revenue and ongoing operating expenses during the downtime. Cybercrime coverage typically relates to fraud or social engineering attacks, while privacy breach and network security liability focus on data breaches and third-party claims. This aligns with the business interruption coverage in the syllabus. Question 21. Which of the following actions is most likely to reduce the cost of cyber liability insurance for an organization? A. Using outdated antivirus software. B. Implementing multi-factor authentication for all employees. C. Maintaining no cybersecurity policies or protocols. D. Having a history of data breaches. Answer: B. Implementing multi-factor authentication for all employees. Explanation: implementing multi-factor authentication (MFA) enhances security by requiring multiple forms of verification, making it harder for unauthorized users to gain access to sensitive systems. This reduces the risk of breaches and can lower insurance premiums. Outdated antivirus software and a lack of cybersecurity policies would increase risks and likely raise premiums, while a history of data breaches signals higher risk to insurers. This is covered in the policy underwriting and risk assessment section. Question 22. Which of the following is an example of a social engineering attack covered under cyber liability insurance? A. A cyber criminal encrypts company files and demands a ransom. B. A hacker impersonates an IT technician to steal sensitive login credentials from employees. C. A competitor's website is brought down with a denial of service attack. D. Customer data is compromised during a system outage. Answer: B. A hacker impersonates an IT technician to steal sensitive login credentials from employees. Explanation: social engineering attacks involve manipulating people into divulging confidential information such as login credentials. These attacks rely on human interaction rather than technical vulnerabilities. While ransomware and denial of service attacks are common cyber threats, they are not social engineering attacks. This topic is addressed in cybersecurity threats. Question 23 scenario. A small business has suffered a data breach due to an employee clicking on a malicious email link. A hacker accessed confidential customer information and the company is required to notify customers. Which cyber insurance policy coverage would most likely apply to cover the cost of notifying affected individuals? A. Privacy breach coverage. B. Cybercrime coverage. C. Business interruption coverage. D. Property damage coverage. Answer A. Privacy breach coverage. Explanation. Privacy breach coverage helps cover the costs associated with notifying affected individuals when their personal data is compromised. Cybercrime coverage addresses fraudulent activities like hacking or phishing, while business interruption covers lost revenue during downtime, and property damage typically applies to physical damage. This is part of privacy and data protection. Question 24. Which of the following scenarios would most likely be covered under a cyber liability policy's cyber extortion coverage? Yay. A hacker demands payment after encrypting company files. B. A competitor sues the company for unfair business practices. C. A business loses access to customer databases during a ransomware attack. D. A company faces fines from regulators for failing to protect customer data. Answer A. A hacker demands payment after encrypting company files. Explanation. Cyber extortion coverage typically covers threats where attackers demand payment to release company data or stop an attack. This is commonly associated with ransomware attacks. Other scenarios like lawsuits, data loss, or regulatory fines would be covered under different types of coverage, such as business interruption or legal liability. This is part of the first-party coverage and cybercrime coverage. Question 25. Which of the following best describes the role of third-party liability coverage in a cyber liability insurance policy? A. Covers costs associated with repairing or replacing damaged company hardware. B. Covers legal costs and settlements resulting from a breach that affects external parties. C. Covers losses caused by an organization's employees mishandling sensitive data. D. Covers costs of recovering stolen data after a cyber attack. Answer B. Covers legal costs and settlements resulting from a breach that affects external parties. Explanation. Third-party liability coverage provides protection for legal claims made by external parties, such as customers, business partners, or regulators, resulting from a breach that affects them. It covers legal fees, settlements, and judgments. First-party coverage, on the other hand, addresses losses directly suffered by the organization. This aligns with the third-party liability coverage section. Question 26. Which of the following is considered an internal threat to cybersecurity that may be covered by cyber liability insurance? A. A hacker infiltrates the network using a stolen password. B. A malicious insider deliberately leaks company data to competitors. C. A competitor launches a distributed denial of service attack. D. A natural disaster damages the company's physical server infrastructure. Answer B. A malicious insider deliberately leaks company data to competitors. Explanation. Internal threats include actions by employees or others with authorized access to a company's systems who intentionally misuse their access for malicious purposes. This could include leaking data to competitors or misappropriating company assets. Cyber liability insurance may cover such actions depending on the policy. This is covered in risk management and insider threats. Question 27. Which of the following is most likely to be a key consideration when determining the payout limit for a cyber insurance policy? A. The amount of revenue the company generates annually. B. The number of employees in the company. C. The type of devices used by employees. D. The number of social media followers the company has. Answer A. The amount of revenue the company generates annually. Explanation. The amount of revenue a company generates annually is often used to determine the risk level and appropriate coverage for a cyber insurance policy. Higher revenue typically means more financial risk and may require a higher policy limit. The number of employees, devices, or social media followers does not directly impact the policy payout limit. This relates to policy underwriting and risk assessment. Question 28 scenario. A company experiences a significant data breach after one of its vendors suffers a cyber attack exposing sensitive client data stored by the company. Which aspect of the company's cyber liability insurance policy would most likely cover the costs associated with responding to this situation? A. Business interruption coverage. B. Vendor risk management coverage. C. Network security liability coverage. D. Data restoration coverage. Answer B. Vendor risk management coverage. Explanation. Vendor risk management coverage helps cover risks associated with third-party vendors who store, process, or transmit data. If a vendor's security breach results in a data breach at the company, this coverage can help cover the costs of responding to the breach. Business interruption and network security liability typically address different types of coverage related to internal incidents, while data restoration focuses on recovery costs. This falls under third-party risk in the syllabus. Question 29. Which of the following is typically not covered by a cyber liability insurance policy? A. Legal costs arising from a data breach. B. The cost of replacing hardware damaged during a cyber attack. C. Revenue lost due to a system outage. D. Regulatory fines for failing to notify affected individuals. Answer D. Regulatory fines for failing to notify affected individuals. Explanation. Cyber liability policies generally do not cover regulatory fines, penalties, or sanctions, while the costs of legal defense, data recovery, and business interruption are typically covered. Fines for non-compliance with laws like data breach notification requirements usually fall outside the scope of standard policies. This is explained under legal and regulatory considerations. Question 30. What does data restoration coverage (ECA) cyber liability insurance policy typically cover? A. Legal fees and settlements related to a data breach. B. The cost of replacing damaged physical infrastructure. C. The costs associated with restoring data lost or corrupted during a cyber attack. D. Business income lost due to a cyber attack. Answer. C. The costs associated with restoring data lost or corrupted during a cyber attack. Explanation. Data restoration coverage covers the costs associated with restoring data that has been lost, corrupted, or encrypted due to a cyber attack, such as during a ransomware incident. It does not cover legal fees, physical infrastructure, or lost business income. This is covered in the first-party coverage section of the syllabus.